Hello everyone. It's Tim Davis again, coming to you guys with the early, very early market update and review. Um, I wanted to do a end of the week review ahead of the weekend just to show you guys the reversal pattern that took place on this week. Um, and I wanted to, just to make sure everybody is aware that we're in a bear market, and um, I mentioned probably about a week ago that every big rally we see will probably be sold until we exit this bear market, or until we see a true bottom. And I don't think that bottom is has happened just yet, and I don't think it's in the cards in the near future. And I'm going to show you some of the reasons why. And if you look at, we're going to look at some of these longer term charts and look at the VIX and look at the overall breadth of the market and show you what's taking place beneath the surface by using technical analysis. So let's dive right in. And we're going to start by taking a look at the NASDAQ futures. And we're going to go straight to a daily chart first. And I want to point this out, and then we'll take a look at a weekly chart as well. And just look at some levels. So here's our daily chart. And this is let me switch it to a 2-year daily chart. All right. So here's our NASDAQ futures. Here's our 2-year daily chart. And as you can see, the bulls tried to start some sort of a rally around the end of January up until about now. And look where we ended up. And the NASDAQ couldn't even make it all the way up there, but they made an attempt to make it right back up to that 50-day moving average, which is my blue line you see here. And look what happened. They got muted. Price action ran up, back up above the 200-day, and pretty much just hovered around there. Could not break back above that 50-day. And it looks like we're starting to head back down already. So unless the bulls find some type of miraculous recovery between now and Friday, between now and tomorrow, actually it's Friday now because it's 12:45 a.m. when I'm recording this video. Unless the bulls find a way to have this bigger rally throughout the day, and tomorrow and later today when the market opens, we are heading back down and possibly heading back down to test previous lows, which is right around here. So we're heading back to test these previous lows, which is right around here. And I was a bet man, I would think that we will break these and start to create another lower low. So that's something to think about. We could not break back above the 50-day moving average, and we're starting to head lower again already. Then let's look at some of the other technicals, but they also I like to pay attention to the totality of circumstances and see what else is showing us these reversal patterns back to the downside. So our full stochastics, which is about wins percentage. You see, as my wins percentage, we made it back up to the overbought territory, and look at what we're doing now. We're coming right back down. That's what our wins percentage is doing. So what other technicals starting to reverse as the wins percentage reverses? Well, and take a look at the full stochastics momentum lines. As you can see, the green one is crossing back below the red one already, heading back down. So that's a sign of a reversal back to the downside. And this pattern, folks, we'll probably stay in this pattern probably for quite some time, because volatility is really, really strong. It's really picking up. And one of the main reasons is inflation. There's threats of a Ukraine invasion. Supply chain demands are still a problem, and there's still fears of this, these different coronavirus variants. So until this inflation gets tamed, and supply chain issues get worked out, these threats of wars get worked out, there's a lot of negativity in our market to keep us muted or keep us trending downward and within this bear market. And as inflation continues to rise to historic levels, you can expect that the Feds will continue to, make efforts to try to help tame this inflation, and they may go, a lot sooner, maybe even bigger rate hike moves than what they previously, announced. And as the CPI numbers came out yesterday, we saw the proof was in the pudding. And the Fed will probably have no choice to move, but they'll probably move a lot faster, and a lot faster, a lot sooner, maybe even more hikes than what they are trying to lead on to. And markets are getting freakish about that when those CPI numbers continue to be so high. It's bringing fear into the market. The Fed will make drastic moves to try to tame this inflation, and all that uncertainty and all that fear just is building up within the market. So, and just keep in mind, folks, we've been in this bullish market since 2009. So people say bull markets don't die for old age. They don't. But when you start to have a lot of negative sentiment right behind a reversal in overall direction and overall sentiment of the market, that just adds fuel to the fire and keeps this market below these major moving averages. And right now we are below all major moving averages on this NASDAQ futures, as you can see. And again, we are just starting to reverse right here. Just starting to reverse back to the downside. Now, if we take a deeper dive by taking a look at a weekly chart, you'll see how this price action, if you look at the weekly chart, we're still elevated, kind of. It's elevated. We're still, up here right around the 50-day moving average on the weekly chart. But guess what? I think that's about to change in the near future, probably very near future. As you can see, I go a little closer. See, the 20-day moving average is fastly approaching a cross. It's fastly approaching that 50-day moving average on a weekly chart. So, and look at price action. Now on a weekly chart, price action can't even get back above the 20-day. So you see this attempt to get back above the 20-day here and another one here, both failing miserably as of right now. With, at the same token, we have the yellow line, which is my 20-day, crossing down on price. I mean, it's pushing down on price. So as price action attempts to hit and break this area, look at what happened. You got this long wick right here. The bears fought right back and pushed price right back down, also, which is causing the 20-day moving average to trend downward as price gets rejected. So you have the 20-day moving average that's trending down. You have price action that's constantly getting pushed right back down. So the moving average is pretty much acting like a huge ceiling. And not only is it acting like the ceiling, it's acting like a ceiling that's constantly caving in. So we're in a downtrend, folks, and that downtrend has not subsided yet. And it's like we are in a longer term downtrend because the weekly charts are starting to show weakness, a lot of weakness in the weekly chart. So that's a look at our NASDAQ now. And the other indices are just following right along. Here's a weekly chart of the S&P. And as you can see, look at the S&P. Same scenario. On the weekly chart, kind of breached that 20-day, and then look at the wick right above the 20 gets pushed right back down. This week that we're in now, same scenario. Right back up, body almost right just below that 20-day. But look at that wick. Price action rallied back above that 20-day and getting pushed right back down. That is on our weekly chart of the S&P. And just looking at a quick glance at the daily chart. Here we go. Same scenario. Bulls tried their best to push above that 50-day and maintain it, but could not. All they did was run into that brick wall and get rejected. It's getting rejected, pushed right back down. Could not break and maintain a level above that 50-day moving average, which is not good for the Bulls at all. So now the Bears are back in the driver's seat, and it looks like the Bears are aiming to push price back down below the to 200-day, and even possibly making a run at an attempt to break this low that we created back towards the end of January. What about the Dow Jones? Again, same scenario. Okay, and the Dow made the best attempt, but it also ran into a level of resistance. Ran into a level of resistance just above 200-day, and it too got muted back about the 200-day. But look where we started to consolidate at right around the 50-day, right into a level of resistance that was just above the 50-day, and it's starting to pull back as well in a strong fashion too. Look at the wins percentages taking a nosedive out of that overbought territory, and the full stochastics is starting to follow. So definitely a big time bearish signal on the Dow Jones futures as well. And here's the Dow Jones futures weekly chart. Look at that. Right back up to this trend line that I drew, which is a level of resistance, which was the level of resistance that the market has been dealing with. Man, since November of last year with this level, you've been really dealing with this level of resistance for quite a while. Looks like it's in the process of failing in a big way. And it's like on a weekly chart, we're probably going to see lower prices back below the 50-day, probably within the next couple of weeks. Now let's take a look at the Russell. And the Russell has just been the weakest of the bunch. It has really been faltering in a big way. And just has not been able to get back to those all-time highs that were set around November of last year. As you can see, remember last year, 2460. We ain't gonna see that no time soon, folks. So, and they've been, and on the weekly chart, the Russell is, like I said, the weakest of the bunch. It has remained below its 50-day, and now on the weekly chart of the Russell, we are about to have a cross. About to have a cross with the 20-day about to cross below that blue line, which is the 50-day, which is a definite negative signal. And I told you guys, whenever we get those crosses like that on the weekly chart, be prepared for a steep downturn. So I would beg to say that probably the next couple of weeks, as soon as that 20-day cross below that 50-day on the weekly, we're going to probably see a big washout of the Russell over the next couple of weeks with these moving averages starting to push price back down in a big fashion. And that's starting to show up on the weekly chart of the Russell. Now, on our monthly chart on the Russell, look where price action is starting. It's starting to push downward. Right at the 20-day, it's almost forming some type of doji pattern, and price action is struggling to get above the 20-day on a monthly chart. So that's a big time bearish signal and not good for the bulls. And here's a daily chart of the Russell futures, that is. And look at the Russell futures. Now, when we get a cross of the 50-day below the 200-day, that's considered a death cross. We've been had that a while ago. Right back here at the end of January, we got that 20-day crossing below the 200-day. the 50-day cross below the 200-day, which is considered a death cross, which means we're in definite bear territory. which means every rally would like to be sold, and we've been experiencing that already. So, and again, when we have those big crosses like that, normally you see a big washout of price action. And I'm gonna show you what I mean by when you had a 20-day crossing below that you know, the 50-day and the 200-day almost at the same time. So here's our 50-day, here's our 200-day, I'm sorry, 20-day right here, 50-day like right here. Look what happens when the 20-day cross below the 200-day. Look at that big washout. Right where I started to draw that trend line, that's where we started to cross just below the 20-day cross below the 200-day, and look what happened. We got that big washout. And like I said, it's like we're about to see the same thing on the weekly chart. So we could be in store for some steep losses over the next couple of weeks, especially after that CPI print already then came out. All right, so that is a look at our major indices. Now let's take a look at gold and silver, because gold, silver, and oil are trying to hold their highs. Now, oil looks like it's probably in it's in position to pull back, and I don't think it's going to you know, last for long. But even though oil is pulling back, this is a daily chart. It's pulling back, but it is still above major moving averages. So we got to see how that works out. Maybe oil pulls back to a certain level, maybe to the 20-day, or maybe even to the 50-day, which would take it down below 85 bucks. But I think oil will find a way somehow soon to find some type of support. So that's how we're watching for on oil over the next couple of days. See if we can find some support around this 20-day, or even around where we broke out above the $85 level, right around 86. So I'll be watching this carefully to see where oil goes. But I think it has a better chance at finding some type of support above major moving averages, because on a daily it's above major moving averages and it has not crossed below, unlike the major markets. That's a daily chart of crude. Here's our weekly chart of crude, and as you can see, we did on the weekly chart, we did reach some overbought territory. Look at the RSI, we got above the 70 level. Looks like we are starting to possibly make a starting to pause here. So I would not be surprised to see oil run into a pause here and start to pull back. But I think once this pullback is completed on oil, I think we're going to see higher prices, folks. I think we may even, by the summer, we may even see oil prices may even jump back above 100 bucks. We had to see how that pans out, but I think oil probably will have some type of pullback here in the near future. All right, now gold, I'm watching very carefully to see what happens here, because as the market pulls back, we notice that gold has been suffering as well, but the moves in gold has been muted, and I'm gonna show you what I mean. That they've been muted is because they have been in this longer term uptrending wedge pattern or pennant pattern or flag pattern, what you want to call it. I'm gonna spread out so you can see it. Look how price action has been tightly wedging into this corner here. So this has been happening up and down, up and down, up and down for a long time. And we are just wedging into this corner of this triangle. So I'm looking for resolve. This is the weekly chart we're looking at. So I'm looking for resolve out of this weekly chart in gold here in the near future. And if I was a betting man, I would say we're probably going to see a resolve to the upside. Just a matter of time for gold to eke out this resolve. And I think we're getting very, very close to resolve. As you can see, we are in a very, very, very tight range as gold approaches the apex of this corner. We're already back above 1800, so I think 1800 I think is definitely going to act as a strong area of support, but I don't know if we're even going to go back that low. As you can see, these every time we pull back here recently, we've been finding a way to create these higher lows. So we pull back. These areas we pull back right to the bottom of the that pattern, and we found ways to find some support and move back up to the top of that pattern. I think eventually we're going to break out of this pattern. It's a matter of time. So watching this very carefully to see how gold pans out and reacts to these pullbacks. So that is a look at gold on a weekly chart. It's like it really wants to break out of that pattern. Here's the daily chart of gold. Again, we could pull back a little bit more, maybe even back to 1813, 1815, you know, back to above that 20-day, I mean, above the 50-day. But, you know, between now and this 1815, we're probably going to see gold find some type of support. So I'll be watching that too very carefully for a possible reversal back to the upside. Here's a look at silver. Same scenario, silver starting to pull back as well, but it too will follow the moves of gold. And I think we are in a longer term pattern that is going to work out in favor of the gold and silver bulls, I believe. So here is a the move in silver. Looks a little bit different from gold, the way it's been traveling, but here's a pattern, here's a range on a monthly chart that silver has been in for quite some time. And as you can see, as we have gotten down to the bottom of this range, look how tight price action has been, man, over the past many months. 1, 2, 3, 4, 5, 6 months so far. We've been in this very extreme tight range, just above a level of support, just above the 50-day on a monthly chart. So this tight range has been with us for 6 months, folks. And we have been in oversold territories on a monthly chart on a wins percentage. Look at that. Just been sitting down in oversold territory. Also oversold territory on a full stochastics. And the RSI has just been in the mid-range. That leads me to believe that silver is setting up for a spike. That's what it looks like to me. It's setting up for a spike after being in oversold territory for some time, and price action has pretty much been muted for a long time. And so I've already positioned myself to just sit and wait, give myself plenty of time for a move to happen in silver and gold. It may take a while, but I don't want to be left out if it does happen. So I'm risking a very, very small amount of capital in a longer term bullish spread in the event that we get that pop and break out of that range. All right. So we took a look at silver, gold, all the indices. Now let's take a look at the VIX. So I'm going to show you guys something on the VIX, which the VIX and the you know, the tool that tracks the S&P 500 stocks trading above the 200-day moving average can be very good barometers to determine when we could see these reversals up and down while we go through this bout of volatility over the probably next year or so. So let me change this back first to there. Now, we'll start by taking a look at, let's look at VIX futures. How about we do that first? Then we'll look at regular VIX that everybody tracks. Now, VIX futures, we're going to go straight to our daily chart and just show you guys what I've been saying is that every time, this is working out like it's been working out like a charm. And the VIX is just oscillating motions in the VIX. That's what the VIX does. It doesn't react off of earnings, anything like that. It's just a oscillating indicator. So it has these spikes up, as you can see that one I just highlighted when we had the first big move up in the VIX, and then what we do, we sold right off. But look what the VIX has been doing. It's been creating these higher lows. Okay. This was the biggest spike we had in a while, up to that 38 level. And look what price action did. Came right back down Where came right back down. Where to? Only to the 50-day moving average, and went below it just a bit, right around here. So to that 50-day, to that 200-day, and what did it do? Nothing but sit down there, create a base for a launching pad, create a base for a launching pad, find support, and now look what we're doing. Launching off of that launching pad for the next move up. And what I believe is that we're going to break out. We're going to probably beat this. We're going to probably surpass this high right here of 33. And we can probably see the VIX head up to 40, folks. So just be prepared for that continuation in the VIX. Perfect timing too, because as the VIX came pulled back, found the support level, started to create a base for a launching pad. Look at the full stochastics. TTM squeeze was in oversold. I mean, TTM squeeze was showing oversold territory, or should I say, was showing some weakness to the downside. It looks like it's about to reverse. So TTM squeeze showed that weakness just a tad, and looks like it's ready to reverse. But look at the wins percentage. It was in a stay down oversold territory until recently. Should I highlight this? Oversold territory until recently. Look at that. Boom. Reversal right back to the snap back to the upside. And looks like the full stochastics is ready to follow. Just starting to pivot back to the upside. RSI is also starting to pivot back to the upside. So I think these next couple of days and probably next week or two is going to be in favor of the bears for the overall indices and the bulls for the VIX. So be prepared, because the bear has came marching back with a vengeance. All right. Now let me glance at the tool that tracks the pretty much the breadth of the market for the S&P. That is the SPXA 200. I mean SPXA 200R. And voila, I told folks that this also will find a way to run into resistance and get rejected. So let me start off with this weekly chart to show you guys where this tool has been. And for the most part, we were as high as 97% back in April 2021. And since then, we have pulled back. And it's like we are ready to head lower again. The bulls fought back, had a couple strong weeks, tried to have a couple strong weeks in a row, but look at that. Pretty much ain't do anything. It just came back above 51, above 50, just a little bit. Like we're ready to go back down below 50 now. That's a weekly chart of that tool. Now let's take a look at a daily chart of this tool. And here we go. Look at the hinging formation on the full stochastics and the wins percentage. Look at them hinging back downward. Full stochastics hinging back down. RSI hinging back down with the big red candle starting to form that daily. So we pretty much came back above this level of resistance, only to get rejected or to get muted after it bounced around just a little bit back above that 50 level. But man, tried to get up here to 60, maybe even go for 70, but got up towards 60 and said, oh, that's enough. And it's starting to reverse back to the downside. So the breadth of this market is getting even weaker. Now, I'm going to show you guys a monthly chart of this, and I'm going to stretch it out over the past 30 years or so. So this is something I've been mapping out for a while, folks. So this shows you the weakness in this market. We could be in the area of getting very, very close to a possible reversal, but I think it's going to be a big washout before we see that in general. So here is all the way to the left of my screen. You'll see this very first highlight I have on top, where this trend line at the top, this dashed trend line on the top is drawn. It's back in 2007, 2008. You can see we had that big pullback in the overall market. Rep of the market got down to as low as less than a tenth of a percent of the stocks were above the 200-day moving average. So almost every stock was trading down below its 200-day moving average. Got down to below zero, to a level just below zero, at zero. See that zero? And then we started to spike. I think we're probably going to see the same type of scenario here. I think we're probably going to see, another washout now. When we normally get down to these levels, we'll start to see some type of bottoming pattern. So we got down here, you started to see the red bars below the zero line of the TTM squeeze. I think eventually we're going to see the same thing in our near future. And look at the RSI is not even in oversold territory. I think we're going to go, RSI is probably going to dip down here to this oversold territory, possibly. So I think there's still more room to run to the downside if we look at the monthly chart on this tool. TTM squeeze has really not went down to the below the zero line just yet, and I think we are probably going to see it drop below the zero line. Once we see that, I expect a big washout. I mean, probably a quick washout. So we have to see if this this bear market that we're in lasts for the duration of the year, or if it just crashes. So some say we'll just get a crash. We'll really start to wash out. We'll see how that pans out over the next month or two, and reverse. We'll see. But when we start to get, what I'm looking for is a move that we've probably never seen in history. That's what I'm really looking for. I'm looking for a move we probably haven't seen in history. So I'm looking for this tool to probably even drop below some of these lower lows we've seen. And I highlighted some, probably even drop below this area that I highlighted, and even drop below the area that we've seen back here in 2011. I think we're heading back to the area that we've seen in 2009, folks. That's just what I believe. I think we're going to go all the way back down here to where we see a 0.00 on this particular reading. So we'll have to see how that pans out. If we get to 0.00, then I'll definitely be looking for a move back to the upside in a big way. All right, so I think that's all I had to share. Oh no, there's one more thing we got to take a look at before I let you guys go. So let's switch here. Let's go to my Twitter feed. My Twitter feed. All right, at the beginning of my Twitter feed, I have pinned the Wall Street Journal highs and lows that you can actually check on a daily basis to see also the breadth of the overall market and what's happening beneath the surface. See if we're creating more new highs than new lows, or vice versa. That would also give you an overall look at the overall sentiment of the market. Now, if I can get this to load, I can show you guys this. So let's see if it cooperates. So if everybody's trying to take a look and it just doesn't want to cooperate. Hopefully it does, because this is a great tool to keep an eye on when we can get it to cooperate. So it looks like market data is being updated. That's what it's telling us. So might not be able to show you guys that just yet. Man, if you get a chance, feel free to find my Twitter page, or even if you can Google this on your own and find this tool. This is a great tool to have. But here is my Twitter page and my name. If you want to Google me on Google, trying to find my Twitter, is at God's Child Tim. See that at God's Child Tim. You can find my Twitter feed, and this is pinned to the top of my Twitter page. So I don't think we're going to be able to view it because it's being stingy and don't want to show us anything. All right, so that's still processing. I'll probably do a special on this particular tool whenever we can get it back up and running. But at your leisure, use this tool, scan it. I mean, take a look at it at the end of the closing of each market day, and you can see the breadth of the market. What it shows you is the highs and lows for that particular day. And it shows you the amount of highs and it shows you the amount of lows. And whichever one is getting the more love, that's normally the overall sentiment of the market. All right, folks. Hopefully this has helped you guys out. In the meantime, this is Tim Davis. I will be signing off. And for those who are trying to, you know, find out where I'm hiding out at, find out where I'm hanging out at, again, you can feel free to visit my YouTube channel at any time. Feel free to come and visit my Twitter page at any time. Every now and then I put some exciting information on here, updated information on here as well. And for those folks who don't know, I'm also on Facebook. So feel free. Every so often, my schedule is very hectic still, but you can always come to my Facebook page to see any updated information about me or any updated information I may have, threw in here about the overall market. So this is my Facebook page. This is what it looks like. So you can find me because there's a lot of Tim Davises out there, but this is what my page looks like. A lot of stuff about my church you'll see on here, and then of course some information about the market in general. And then some pictures of me, of course. And where else can you guys find us here? Let's see. That's still doing its thing. Also, Discord. So if you are a Discord, if you're active on Discord, I can send you a link to join me on Discord. Or you could just try to find a way to ask for a request. So here is, I do share all these videos that I have. I share them on my Discord. And I am also with Dark Pools Chart Group. So here's a Dark Pools Chart Group. If you'd like to join us, there's a lot of action that goes on here throughout the day. We're just starting to get this thing up and running, so bear with us. But Dark Pools Chart Group, where there's a lot of us who were in our old company. A lot of us have migrated here, so you can feel free to come and hang out with us out during the day as we continue to revamp and build this up. But if you'd like an invite, just send me a inbox me on Twitter or Facebook, say you like an invite, and or find me on Discord, and I can send you that invite. Or just find me on Twitter. I will send you the invite because I have a copy of it somewhere, and I can just send you an invite, and you can join up with us and hang out with us and follow us as we navigate through this market, and we share a lot of good information that can help you in your daily trading. All right, folks. Hopefully this is some good information, and I will catch you guys on the next video. Enjoy the rest of your evening, and I will probably catch you guys on tomorrow.